Good afternoon and welcome to Nasdaq Spotlight. I'm your host Jill Malandrino, Global Markets Reporter at Nasdaq. We're excited to be hosting the Africa Investor Conference today at MarketSite in Times Square, New York City. Joining me for this panel on African infrastructure investment, we have Hubert Danso. He is with Africa Investor. Franny Leotier, she's with the Trade Development Bank. To my left, we have Mamadou Mbaye with Phonsys and Richard Biragaba with the Uganda Pension Fund. Thank you, everyone, for joining us at the market site today. It's incredible to see just how many people have joined the Africa Investor Conference, even from last year. Yep. So, Hubert, kick it off with us. What is happening here today at Market Site?
Well, essentially, as you know, each year we partner with Nasdaq MarketSite to bring the leading and largest institutional investors, both pension funds, sovereign funds, insurance companies from Africa, who are really driving this new infrastructure, leading opportunity, which is how to mobilize pension fund money, sovereign fund money to help governments deal with 138 odd billion annual infrastructure deficit. So I think the difference today was we had a lot of interest that's been building up over the years from global institutional investors, in particular Canadian pension funds and sovereign funds and a number of the key players. So it was a really exciting and sort of thoughtful day.
And Franny, I want to ask you the same thing as well. What's your role with the Trade Development Bank and how do you fit in with the conference today?
Well, I'm a Chief Operating Officer at the Trade and Development Bank and also oversee the asset management work of our bank. We are sponsors of this event, and I'm very happy and proud to say that because I've been at AI events in previous capacities. So it was really good to see this time around not only the interest in Africa, but the actual action on the ground, because the people who were on the panels today were investing in Africa, were knowledgeable about the continent, and we've gone beyond telling people to come to Africa to now having people talk about what they're doing in Africa and how to scale that up. So I'm very pleased that we've been able to participate during the journey with Hubert's forces and efforts around AI, and how now we've come to this stage where we can talk about scaling up. So that, I think, to me was the highlight of the event today.
From aid to trade to institutional investment, right? That's the mantra.
No, absolutely, but this time I think what Franny is saying is it's actually gone from notebooks to checkbooks. Right. So we're no longer taking notes, we're actually putting capital to work.
All right, Mamadou, I'm going to ask you the same thing as well. Phonsys, if you could tell us about that.
Well, Phonsys is a strategic investment fund of the state of Senegal. So we're investing alongside the private sector inside the country. We build a strategic partnership using public money, building what we call the blended finance strategies, whereby we use public money as a leverage to attract crowd-in private investor and strategic partnership for the country. And we were very happy to take part in this forum where the goal was really to underline the fact that Africa is part of the asset allocations right now. It's really part of a landscape. It's not an investment to be. Infrastructure is also a very good asset for strategic investor, institutional investor to look at. The USA and here in New York as being, the leading financial platform in the planet is really where we have to come to speak about Africa and make it really part of a discussion and part of the agenda. So we are really pleased to do that. Yesterday we spoke about ESG, and today we spoke about infrastructure, and just stressing the fact that the only time where carbon really emission were curbed down was during the 2008 market downfall, market slowdown, global slowdown. And that shows the importance of the financial markets into that global issue of climate change, And having here all the institutional investors and most of the trillions of dollars investment managed from here, we can just say to institutional investors that they have a really a great role to play in finding the solutions, and that's something that they can even self-regulate if they really have the will, and we're really happy to bring that message.
All right, and Richard, we'll round it off with you, the Uganda Pension Fund. What are you excited about with AI today?
Well, the big news is the NEPAD fund that's the guarantee is coming to infrastructure. I think that's great news for us. We've been talking about how we can deploy our capital. We know that we would like to include the infrastructure asset class onto our books, and this is an opportunity to do so. Obviously, we've put a lot of money into fixed income, largely in country, but also within the East African region. And we think that this is an opportunity now to begin looking at some good opportunities, especially in the infrastructure side. We've got a couple of deals that are ready to come to the market, even within the region and in Uganda in particular, and would like to put our money to good use, and we think this is a good opportunity.
How much financing is required by African governments to deliver Africa's infrastructure goals?
Well, I think there are a number of different estimates out there, but at the last count, I think it's premised on the fact that government should really be looking at sort of committing up in the region of 3% of their GDP to infrastructure investment, which has sort of not been the case, but it's sort of going in the right direction. But the current deficit is estimated to be about 138 billion US dollars per year for the next 10 years to actually bridge that gap.
Well, I think it's interesting that infrastructure is becoming a goal because a lot of African nations are putting their money into commodities, right? And we saw what happened with the energy market and how it concerned some stabilization concerns, right, between currency and commodities. So it seems, especially what we have in the U.S. as well, infrastructure, real estate, physical assets are really becoming attractive here too. Are you seeing the same thing, moving away from commodity dependency to infrastructure investing?
I think some of the things we're seeing in our markets definitely is diversifying. Of course, commodities continue to be a big part of our countries, especially on the export side. But we are also seeing that because of the huge infrastructure deficit that has been around for a long time because of all the issues relating to our after independence, we find that now there is a drive to bring more money into infrastructure, roads, bridges. There have been oil discoveries, so there's also a lot of investments that's required in that particular area. New ports, new pipelines, new airports. And we also think that specifically the roads infrastructure as well, more investments in there. But I think generally to improve the trade facilities, I think we'll see a lot of money coming, especially in the infrastructure side, so that can able to create the wealth and the trade that's required to drive this continent into the next stage of development.
Freddie, when we think of infrastructure, it's roads, bridges, tunnels, and so forth. What about other areas of infrastructure, like technology, for example, mobile payment systems, banking? Is that a priority as well?
Absolutely. In fact, technology investments have really driven growth in a number of countries. We talk about East Africa. We are in Nairobi, which is the headquarters of our operations, and it's known as Silicon Savannah because there's a lot of innovation in technology which is driving payment systems. We have that across all of East Africa and the rest of Africa as well. But also supply chain economics, which is driving investment to supply all of the necessary services that's fueling the trade, intra-country trade that has now started to grow across a number of regions. And these investments rely on technology for a number of solutions, whether it's warehousing, posting of trades across countries, handling all kinds of risks on the supply chain. So the logistics area is also a big driver of the technology innovations that we're seeing. And then there are things like health infrastructure that also relies not only on construction, but also on the IT sector because of the mobile health solutions that are coming up and the pharmaceutical trade, which is very critical for the continent as well. And then the other form of infrastructure is water supply for cities. We've had water crisis in cities like Cape Town with new solutions coming up now in technology which can use desalinization, new techniques for irrigation that would allow crops to grow even during low rainy season. All that technology is also driving investment across different countries. So when we talk about infrastructure, we're looking at ports, railways, roads, toll roads especially, but also the aviation sector that's riding on those investments, the mobile payment system that are riding on the IT investments, and of course the whole supportive investments that fuel the commodity trade as well. And all of those are under the category of infrastructure. And we, in our bank, because we do both trade and project and infrastructure finance, we're really at the forefront of that because we see those correlations and cross-correlations. But also, I think these kind of investment offer opportunities to investors to break the correlation cycle and invest in different portfolio aspects.
Mamadou,
We're building just on that. I just wanted to just add on to that because you touched on a really, really interesting point. I mean, being in Nasdaq, one of the technology exchanges, I mean, the largest and most influential in the world, there's a platform called Africa PLC that is trying to change that entire dynamic. It's almost like an Alibaba, but for business, because you've got approximately a 4.2 trillion estimated market of business consumption that is not intermediated by technology. So we're seeing a lot of that that's basically working on the trade finance side, on the blockchain, it's working on the logistics side and the payment side, but payments that can actually be facilitated across border through the better use of optimal technology. So it's a really, really exciting time for those types of approaches.
Mamadou, let me ask you though, risk mitigation and transparency has always been an issue when looking for institutional investment with African infrastructure. How concerned are you about that? And then I'll ask all of you this, what's being done to promote more transparency?
Well, risk mitigation is really a key issue, that's for sure. And what we try to also demonstrate is that, there may be a global issue about the rating system for some of our middle-income countries. West African countries would have a rating which would be less favorable than one very average rating of a regional health authority or health agency here in the US. For example, the Illinois Health Authority would have a better rating than a sovereign state that cannot file for Chapter 11. So that being said, this is the basis on which we try to attract investors. And what we try to do in infrastructure is say that if you fund a project with equity, with first loss, with some senior debt, what we need from our financial partners now is to really be backing us as guarantee, not come fund project, but give us the guarantee which is needed on the senior debt to attract institutional investors and global investors. That's a way of upgrading the risk evaluation of those projects on a case-by-case basis and make us able to really get or bridge the credit gap which we're finding in the continent. If you want to reach the level of $150, $130 billion a year in terms of funding, this cannot come from public pockets. It has to come from the private sector, internal Africa, external Africa, and we want to put the infrastructure in place so that these investments are attracted.
So is this, Richard, is this part of the African infrastructure guarantee mechanism? Is this what's designed to mitigate that risk?
Absolutely. It's basically looking for structures that would reduce the risk, but also make sure that this is bankable, also investable in terms of that, but also using some of the, the modern techniques that we've got for mitigating some of those risks, credit ratings, making sure that we get the international rating agencies to basically bring down the risk on some of the projects, but having guarantees that are delivered by structured companies so that they are able to bring down the risk and also allow other institutional investors to come in. And I would think that that is one of the things that we're driving. There's also been this push against corruption because it's generally known that that's been a big problem. So the tendering process using the World Bank tendering techniques to make sure that it brings transparency to the projects and whoever is doing that. So I think that all these combined can bring the risk down and also improve the transparency, to at least demonstrate that there is a little bit of work that's going in improving the image of the African investor.
Right. Franny, are you seeing improvement in terms of how the public sector is responding to private investment? Is corruption, it's being addressed, obviously. Is it improving?
I think it's improving in most environments for a number of reasons. The first one is governance changes. And I'm very pleased that we are here with pension funds that have strong governance because those are the areas that really impact the quality of investment. If you take the example of our bank, recently we had an upgrade from our rating agencies, and the recognition came from the quality of investors into the bank, the quality of internal management, including the talent attracted to work in Africa, and of course the transparency of information and the way in which performance is being driven by results. And I think these combinations of factors show that it's possible, even in weak governance environments, because we invest in rather weak governance environments, to actually deliver quality if you have the right processes for procurement, as Richard said, for governance of the type of investors that you have with the KYC requirements and so on, to be able to verify who's investing in you, but also for the way you publish your results and the returns that you offer, not only in money but also in impact terms to your investors. So we are seeing a big improvement in that regard, in the way pension funds are being managed, in the way public sector is actually giving room to private investment to come in. When you take the examples that we have invested in, whether it's the Turkana power investment, where the government basically let private investment drive the process of what innovations would come in terms of wind energy. You can see the same thing in geothermal. We have pipelines that we're investing in, where the governance structure around the project is being designed in order to give more transparency. And I think these measures at the project level, at the sovereign level, but also at the instrument level, are helping bridge the gap between improving governance at the country level, which takes time, but also improving governance in your day-to-day, which can be done really through structuring, and we're seeing a lot of those results.
And to your point there, I think it's a very interesting dynamic. You see, a number of the pension funds have small teams and don't necessarily have deep infrastructure investment experience. So a lot of the actual decision-making process is sort of left to the advice of asset allocators and investment consultants. So what we're seeing a big take-up of on the continent is this whole concept of fiduciary rating, where the actual investment managers or fund managers are now actually being rated to be able to give confidence, so that the actual pension funds can discharge their fiduciary responsibilities in terms of being able to allocate for infrastructure to a vetted manager that can actually deploy and manage and return the capital on a local basis. So that's quite an interesting dynamic, because that actually works even in fragile environments. So.
How confident are you that you will attain that $120, $130 billion goal in terms of African infrastructure investment? I mean, there's a lot of opportunity.
Yes.
Right?
Look, it's a lot of opportunity. I think we just go one transaction at a time, and then I think we should just really look to scale it on a programmatic basis. Because if you begin to look at a $60 trillion pool of global institutional capital looking for this type of growth, I mean, the opportunity really sits with us in the continent, both the public and the private sector, to really create the pipeline. Because we've now moved away from should I or shouldn't I in Africa. The case now is bring me the transactions that meet my criteria. So if you've got 60 trillion in the market, that is not saying I would not look at Africa, but it's saying I would, and I'd look at infrastructure. Please bring me a deal. That seems to me like a door that's open. So it's really for us to walk through.
And I would say to that point, besides infrastructure, we have markets where you have very low percentage of mortgage market versus GDP, which is an issue. We have a huge agricultural business in Africa. You can't really account for inventories because of banking regulations, and we have a long way to go to actually really fund efficiently our economies, and we really are at the starting point. But the new thing is really Africa is here now, really on the agenda, and there's a lot of improvements, or room of improvements to be made, starting with infrastructure. There's a lot of things we can actually do together with U.S. insurance.
And that's what's so exciting, because that's where the growth is, right? It's so everyone's trying to identify a growth area, because we've had such amazing growth over the past 10 years. So I think it's a really exciting time on the continent right now. And I want to thank everyone for joining us at MarketSite today. It was our pleasure hosting Africa Investor once again. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.